Hey traders, it's Jason with Jenkins Risk Management. Doing an update on NEO now. All right, we just did Bitcoin. This has been probably the best performing cryptocurrency the last couple weeks. Just been absolutely on fire. So this is one we've been accumulating down around 7 or 8 in US dollar terms. This is just, I've been doing a lot of videos on this, but I want to talk about obviously what to do from here, but how to trade these markets when they start to go vertical. Um, so um, I did a video about how if you start a position high and you start light, you can still work your position and bring your average cost down just by working your size heavier. You can almost think of it as a pyramid. You don't want to just double down, double down, double down, double down. That's reckless. But if you start, I teach my traders in terms of 80-20 rule. So 80% of the time we want to trade with the trend. We want to keep 80% of our risk or 80% of our max position size with the cycle. When our cycle turns up, we get more aggressive on setups like this. All right, but we're adding and reducing, buying, taking some off, buying some back, buying some more. We bought into this breakout here, taking profit, buying some back, taking profit. So from here, though, a simple way to trail out some of these positions. So some of the problem that traders have is a market goes on a good run and they're up they have so much money in their pocket, they have had a good run, their percentage move is up something ridiculous 2-3 times, and then they sell everything. And the problem with doing that is you lose your position. So there's probably a lot of traders that, and see, I don't teach my guys, and we don't think in terms of all or none. We think in terms of, we don't think in absolute terms, we think in relative terms and on a dynamic basis. So what that means is you don't need to sell everything. You don't have to just get out of everything. Why does it have to be decision to keep it all or get out of everything? You don't have to do that. You can buy more here, take profit into these highs, take more profit, but the key is to let some run. All right, and in order to do that, you got to have a feel for how you want to work your trailing stops. So I'm dragging the chart like this because at this point here, guys, this move seems really extended. So there's a lot of traders, and I see it in our own chat, that they just get out of their entire position here, just because it is a big move. I mean, you basically double here, and then the trader goes, "Oh, that's too far, too fast. I'm getting out. I don't want to give up all my gains." Well, that's not really the best way to trade it. Take some off the table, but you let some run. And we call that letting the market take you out. So we have trailing stop rules that only when the market breaks trend do then we get flat and or short. So that's not something that we decide just to take ourselves out of the position. The market decides to take you out. It's called letting the market take you out. So here you have already doubled. The market is overbought. This is a hell of a run. But guess what was to follow? Boom. And even more upside. And even more upside. So I'll teach you guys just one simple trailing stop method is just use this 8 period moving average. It's great for any chart. But this red line, when you have really momentous uptrends, price is going to ride this 8. You'll notice each candle hasn't broken this 8. So you can just stay long a piece and let this thing run until the market finally comes and breaks that low, breaks that candle on a closes below that red line. That's a very simple way to do it. That's our least favorite way to stop out. What we like to do is use what we call the TMS. So I'll show you on a smaller time frame. We go down to like the 1 minute or the 1 hour here. And so in our process, we're adding and reducing. meaning so I don't have the signals on the chart, but right, we were adding on the breakout here, taking profit. Right, everybody was all excited up here in the 30s, high 20s and 30s in US dollar terms. Then boom, you get a bottoming tail. So we took profits into this strength, rebought, okay, rebought here. You could have taken some off the table here and rebought again down here. That would have been even better. But we rebought here and then took some profit there and then on the new highs. But what you're trying to do is follow these pivot lows. We call this our pivot stop. So you stay long in your position, adding and reducing, but you keep the core until you violate these higher lows. And that way you're just working up your trailing stop. So this is our new pivot low right here. Going to stay long some NEO. Unless you break that, then you take some more profit and or get flat. Right? So this is how this is what's essentially keeping this market bullish, is higher lows. So this is a nice pivot low right now. But if you took profit up here, you buy some back towards the bands here. Every time you get to the bottom of these bands, these are great locations to buy. You don't want to be chasing up here. Up here, you want to be taking profit. So I teach my traders, we buy on the dips, and then when you move to a new high, this is a new high relative to here, you want to be taking gains. The novice or average trader, or amateur trader, they're buying new highs. They're buying up here. That's too late. That's terrible timing. So we take profit on new highs. That's just one of the simple rules that we have. So anyway, big picture on NEO. We still want to be bullish. It's had a hell of a run. We've taken a lot of our profits off the table. I mean, up 460%. Our average cost is down at 864. So just an amazing run. But once you start taking the majority of your profits, you can still keep trading it around. I mean, I want to be heavier. I want to be heavier when we get back low within the cycle. Okay. You're high within the cycle now, low within the cycle, low within the cycle, low within the cycle. You're pretty well extended away from the lower bands, as we call it. If you want to use an RSI, you can see that we're overbought as well. So that all these things tell you want to be taking profit. Doesn't mean you take everything off, but I'm going to keep a core position on this probably for the next 10 years. That's my thinking. Now I might be really small when we get really overbought. My position might be small, and I'll get more aggressive if we get a pullback. But any kind of dip, guys, now back towards these breakout highs right here, 53.97 in BTC, you want to be a buyer back on that dip. I don't even know if we'll get that low. Anything back here towards 81 handle, back here, you want to be a buyer. But we've mostly been taking profit over the weekend, today. I mean, look how extended this weekly chart is, guys. It's a moonshot. So don't get greedy, take some off, but don't lose your position. Anyway, we'll have more updates to come on NEO, but this is one of our favorites. It's been a great ride. And yeah, we'll stay tuned, subscribe to the YouTube channel. We have a chat room too if you want to come join us. JenkinsRM.com, you'll find it at the top. So we're growing our trader base, the community. We've got several services we do, but you can find that at the site. So anyway, guys, come join us. Hope that helped.